Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Wednesday, March the 9th, the year's 2022. Let's talk trading. Trading better, part 5. These videos are for educational purposes only. Your results may differ from mine. The pound is moving off the bottom. It's 89 pips off the monthly low, 267 off the monthly high, and we are 246 pips below the monthly open. For the week, we're 88 pips off the low, 68 off the high, and 57 pips below the open. But that's rapidly changing right now. We can see we've got 2 pairs that haven't filled the gap. And it's funny, it's the 2 pairs that I used to trade the yen all the time, and now I trade the pound. And you can see we are still below that weekly pivot. We haven't hit it yet. We didn't hit last week's. You can see yesterday and today we were outside the opening range of the week, but we are now inside it. In fact, we just climbed above last year's low at 3160. Notice yesterday was pretty much a doji candle, and you can see we've broken out. We've reversed. So for those, I guess you would call them candle pattern traders, this is something that you wait for and you try to take advantage of, these dojis. That's weird. Some strange reason I'm having a problem with the computer. And we've picked up a few inside bars here on the daily, mainly on the monthly though. Once again, we see that doji and price breaking through. 93 pip range so far. We've got 5, 6, 7, 8 pairs over 100 pips in range. And you can see across the board, most pairs are up. The US pairs are down. Short zone near the daily open triggered short once, but turned right around. You probably got stopped out. The buy zone, on the other hand, you had a few hours there to trigger in long. And you can see we are well above, about 60 pips above that buy zone at the moment. One thing to note here, you can see the low got down to 46. We're in that, what I like to call the launch pad, the 40s. And so anywhere between 40 and 50, this area here, you can see price dropped in. Once again, if you were in a trade, you're looking left, you see a lot of wicks here. And when price went above this area here, the previous candles open, trying to get it. For some strange reason, this computer's really working slow. Right there, 49.9, almost a 50, but we launched. Now 70. Red rats get ready to feast. You can see there was already a few times where the red rats have feasted. See, we're 10 pips off the high right now, 9.9, now 11. There might be a chance for some shorting here. Be careful, of course. We just hit R2. Said bias was short near the pivot in R1. That only worked one time there. Missed pivots on the day. We took it out. Remember, we had 1, 2, 3 missed pivots in a row. We took out today's pivot. We took out yesterday's pivot. So for you pivot traders, there was an opportunity to fade the pivot. And wick zone, it was pretty much all wick. There was only 2 pips a candle body. So in and out of the wick zone once again. The higher low, lower high scalper with the 3-level ZZ. You can see here. It signaled a short here off that highest low, signaled along here, and then we had a couple of short signals here, here, and then off of this one, you can see we're getting more short signals. But what you want to do is you want to look left. You can see here price is ranging. There's this huge M1 return bar. So look for price to drop back down to the 40s. When? Not sure, but that's something that I would be definitely looking at. There's got to be a bunch of buyers down here. And you can see here, between here and here, that would be called an imbalance zone. So once you learn these things, you don't really need some of those indicators on the chart. You just look at the chart and you just see them. So between this low and this high, that's one big green imbalance zone. And once again, you can see using M1, you can see it came right through the launch pad. Once again, there's that big imbalance. But at the moment, price is moving up. If we switch over to H1, you can see we broke out of the previous hour's high, broke through the Walmart line at 70. It's hit a high of 74 this hour. So one other thing, as I mentioned earlier, I like to look at the 30-minute chart, the M30, because price usually likes to cover the M30 candle bodies. So you can see here, price covered the body, came down to the launch pad, turned right around and rocketed up. Here, price covered the body, went through the launch pad, turned around. Here, price covered the body, price covered the body, price covered the body, price covered the body, and you can see right here, price did not cover this body on the next candle. Here, price didn't cover it. So what usually happens is after it covers it a bunch, then sooner or later, it's going to have to break out. This was an inside bar, and you can see it broke out of both sides. Just something else to watch. Now, we've been talking about trading better, but let's just look at one more chart here. Going through the chart, you can see we are in the upper ATR zone at the moment. Yeah, we've got a bunch of pairs here. Upper ATR zone. The euro's actually through the ATR zone. Bunch of pairs have crossed above the daily highs. They're in the upper rat zone. Got some nice holo trades here, and these are huge. I wouldn't even think about reversing until I got a really strong signal. Might want to let this hour go out. You can see all these pairs are making new highs for the day. And here's a couple making new lows for the day. But one thing about trading better is, we talk about stop loss and risk a lot. And we talk about, trying to do your execution just right. But what if you make a mistake? What if you get in late, enter a trade late, it goes your way just a little bit, but not even enough to break even, but it gets really close. We just punched through the 3175 psychological. So price gets really close, but then goes against you. So what do? Let's say price hits your stop. How do you react? Are you mad? What are you mad at? The market? Yourself? The thing is, if you get mad because you got stopped out, is it possibly because your position size is too big and that amount of money, losing that amount of money upsets you? Because if the amount of money you lose upsets you, then you can reduce your position size. But if you're even trading for, a penny or a dime a pip, I think maybe a dime a pip is about the smallest you can trade. I don't know if you can trade for a penny a pip. If that upsets you, then you really have to look in the mirror and figure out what's going on in your head. Because this is trading, and you're not going to win every trade. It's like watching baseball players when they get mad when they strike out. It's just part of the game. Are they mad at the pitcher for throwing them a strike? Are they mad at themselves? Are they mad at the ump because it's a bad call? All those go back to one thing, brain management. Because you see, it's not what's happening that's important or what happened. It's how you react to it. So, fellow traders, that's it for today. I hope that little tidbit might help somebody out there trade better. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.